Hey guys, welcome back. If you're a follower or been watching some of my videos, I've been going over, investing, getting out of debt, some of the tools you can use to create passive income. Um, Today, I'm going to go over one of my volatility ETF strategies that I use for momentum trading or day trading. And let me just explain what momentum trading is. Uh, that way you can get a better idea of what it is I'm going to show you here. Momentum trading would be basically where you take a financial instrument or tool, ETF, stock, whatever, bond, etc., and you're basically jumping into the markets, buying up, a bunch of shares, and then basically you're buying in low and selling high. Okay, so it's price fluctuation. You're looking for price movement in an upward trend, and then selling, and then turning around and doing the same thing over and over, like just repeating that process until you've accumulated wealth or a lot of money. Now I'm going to tell you real quick. This strategy doesn't work 100%. Okay, I've lost some money with this strategy as well. Um, but a lot of that was based off of breaking my own rules, not being disciplined, letting my emotions get in the way. So I'm gonna let you know real quick. Keep in mind when I'm showing you this, it sounds simple, and it is, but there is about 80% of it's psychological. Okay, now the other 20% is the mechanical fundamental parts of just basically clicking a button, making the trade, watching your price movement, stuff like that. So getting into this, I turned the lights down in here so that you can see a little bit better. There was a bad reflection coming in, so that's why it's kind of dim in this room right now. And it'll allow you to, look at this and get a better idea of what's going on, because the light was shining in from the room and it was creating a lot of reflection. So it's hard to kind of see what I had written out here for you. But I'm going to cover all this for you. And this also falls under technical analysis. So if you're wondering what technical analysis is, this gears towards technical analysis. What you're looking at here is basically a chart, and I'm going to let you know what I use for my charts on ETFs, for my momentum and day trading. If you go to freestockcharts.com, there's a chart that you can get, and it'll allow you to add instruments, indicators, and set up your charts, according to the way you want them. So it's freestockcharts.com. Check it out. It's pretty cool. But what you'll do is you'll set up a chart, kind of like what I have right here. All right, and all it is tracking the movement, the price movement throughout the day for a stock or an ETF. Okay, now these charts are broken down into different time intervals. All right, so you can go with like a 5-minute chart. I've got them listed out here. You can go with 5-minute chart, 15-minute chart, 30-minute chart, 1 hour, a 4-hour, and a daily chart. Okay, those are your choices. You can even go higher than that, like 1 week, 2 week charts. But if you're sticking to the rules that I play by, you want to get in and out of the markets like the same day. Okay, because there's just the problem with day trading and speculating, and this is something that I have encountered and learned through my own experience so far doing this, is that you can't predict what the price of a stock is going to do, or what the stock market's going to do. You just can't predict it. Okay, people will tell you, hey, I got the magic ball, I got the secrets, I can predict the future of the stock markets. If they tell you any of that, just run the other way. Like, get away from them as quick as possible, because there's no magical formula or potion or secret to knowing what's going to happen in the future. All right. So we got that out of the way. Um, you're not going to know 100% of the time what's going on with your stock, and so therefore, I mean, you're probably going to want to get in and out of the markets as fast as possible. That way, all you're doing is reducing your risk when you do that. All right, so that you don't lose your money, and that's what you want to do. So just remember that rule. If you go into momentum and day trading, try to get in and out of the markets the same day. Okay. Now I'll go in a little bit later and explain why you want to do that. Because I did lose some money just recently breaking my own rules, and all it came down to is my psychology. 80% of it being psychological. I just broke my own rules. So I wasn't disciplined. So remember that. So the chart here that you're looking at, that's kind of what it's going to look like on freestockcharts.com. Now you're probably wondering what the red and green are on here, and I'm going to cover those real quick. The green, and this is just for freestockcharts.com. Okay, it's a little bit different if you are looking at charts from like a different platform. For say like foreign exchange markets, it might be a little bit different on a different platform. If you're going with freestockcharts.com, you're using this platform that I'm showing you, this is what it's going to look like. Alright? And the other charts from other platforms are going to be real similar, but they're not going to be exact. So, moving forward here, what you want to do is set your charts to show Bollinger Bands. And I'll explain what Bollinger Bands are real quick. They just, they basically track the downtrends and uptrends of price movement on your stock. Okay? Now, that's really key and vital information that you probably want if you're going to get in and out of the markets the same day, because basically what this comes down to is timing. Alright? There is risk involved with it, so we'll cover a little bit more on the risk side of it here before, after I wrap some of this up. But moving forward with the explaining what the red and green, these are candlesticks. Okay, so if you ever hear anybody talk about candlesticks, that's what they're referring to as these red and green on the chart. They're candlesticks. So if you see a solid green candlestick on freestockcharts.com, what you're looking at is what it's basically telling you is that the stock itself is bullish. Alright, now there's something called bullish and bearish. Bull market, bear market. So bullish, all that means really, if a stock's bullish, somebody's talking about a stock being bullish, what they're referring to is that it's gaining momentum, alright, and the price is going up. Now if they're talking about it being bear or bearish, that means the price is going down, it's losing strength. Alright? So, your solid green candlestick this means it's bullish, but it's losing strength. Okay? So, it's still in an uptrend, but it's losing strength, so guess what's coming? Not too far in the distant future. Your pricing will start going down. So, it's something really, that's some real critical information that you need if you're going to be tracking price movement on your stock and you're looking for that uptrend. Alright, and this strategy I'm showing you here, that I'm going to show you, is finding those uptrends so that you can get in right at the beginning of the uptrend and then sell at the very top of the uptrend before it goes down, or start selling as it's going down. Okay? So that's the green candlestick, and it's shaded in. The next one is a green candlestick, but it's not shaded in. It's got a little, it's just an outline of a green candlestick. This means it's bullish and it's gaining strength. Alright? That's important because you want to find this, what they call a range zone. And this would be your range zone right here. And you can see, if you're looking at this chart here, the uptrend zone would start right here, because that's your first candlestick that's bullish, and it says it's gaining strength, right? So that would be the beginning of a uptrend. Alright, now you're probably wondering, what are these lines in here? I'm going to break those down real quick. We talked about Bollinger Bands. Bollinger Bands, like I said, they help you track the uptrends and downtrends on price movement of a stock. Those Bollinger Bands are on the inside. So if you utilize these Bollinger Bands, set them to a deviation of 1 on freestockcharts.com, you'll see the inside, the two inside bands here. These two bands right here that I'm pointing at, those are your Bollinger Bands, okay? And you can see they just follow the whole chart, like with the candlesticks and the price movement of the stock. They'll follow it. The next set, though, outside of that, these two lines right here are going to be called acceleration bands. You can set those up as well on your charts. The acceleration bands are on the very, very outside here. And then you have the blue line in the middle, which is EMA, stands for estimated moving average. So those are the three tools you want to utilize in your charts when you're setting up your charts. Is the estimated moving average, your acceleration bands, your Bollinger Bands, and set your Bollinger Bands to a deviation of 1. Okay? You'll get a chart that looks just like this. Now the inside the Bollinger Bands here, you see this blue shaded area right there? That's what you're going to be focusing on when you're trying to find your uptrends. Basically what you want to do, before we go any further, I'll explain the red candlesticks. Those are bearish, so they're losing strength, right? So you see red candlesticks, price is going down. So what you want to do, now that we got the candlesticks out of the way, is you want to find this uptrend that I've been talking about, where the price movement goes up. So how you do that, you want to follow the inside, you want to look at inside the Bollinger Bands, so this shaded area right in here, you want to focus on that area. And what you'll do is you'll see a bullish candlestick, I'm sorry, not this one, but this one right here, where it's gaining strength. You'll see it occur right along the estimated moving average. Okay, when you see that, you want to get ready, because your price movement on your stock is gaining momentum, which means it's going to go up. Alright? Now, for how long? I don't know. This is why you want to get in and out the same day, because it may do this and start an uptrend and then just shoot back down. And then you're out of your uptrend again, and you have to wait until you can get another opportunity for the uptrend to occur, which may take all day. And it may not happen at all. You may have to end up getting out and just taking a loss. Like I said, this doesn't work 100% of the time, but this strategy I'm using here that I'm showing you has worked 92% of the time for me. There's only 8% of the time that it doesn't work. And normally I've got a cutoff of how much money I'm willing to lose so that I don't lose all my money, and I just take a small hit and I jump back in like 3 days later, do it all over, and I end up winning. Okay? Again, that's part of the psychology behind this, and being disciplined with your emotions. I explain a lot of that in my risk management videos, and so keep that in mind. We're not talking about, getting in and out the same day. So as you can see here, though, you got a range zone. That's what a range zone is. It's when your candlestick starts right there next to the estimated moving average,